Good morning, everyone. This is Sakis Paraskevov, Senior Fundamental Analyst at IronFX, bringing you the morning comment for the 27th of May. Fed Chair Yellen to set the tone on hikes. The event that is set to attract the most attention today is a speech by Fed Chair Yellen at Harvard University. Given the event and venue, there may not be much discussion on the economy nor monetary policy, but we will watch closely in case any reference is made. In recent weeks, we saw the April FOMC meeting minutes suggesting that the June rate hike is still in the play, and we also heard various FOMC members saying that the market is too pessimistic regarding the Fed's pace of normalization. These comments bring flashbacks of various FOMC speakers in mid-March who advocated rate hikes as early as April. Shortly after, Yellen adopted a cautious stance and essentially erased such expectations in her speech at the Economic Club of New York. That being said, we could see Yellen striking a balanced stance again, trying not to tip the scale either way. What's expected, though, is that she is likely to join the chorus of hawkish rhetoric and mention that the global risks to the US economy have subsided considerably since March, and that while Q1 data showed signs of slowdown, indicators for Q2 so far have suggested that the economy is regaining momentum. This may imply that the June hike is still in play, thereby bringing market expectations forth and keeping the committee's options open. Something like that could extend the dollar's gains from this month. However, our base case scenario remains that the committee is likely to hike once this year, and that September and December appear to be the most suitable months for the next rate move. Even if economic data continue to improve in the coming weeks, the committee is likely to need more time in order to feel confident that such improvements are durable. What's more, Britain's referendum on EU membership could be another complication to raising rates in June, as the vote is to be held just a week after the Fed policy meeting. Now, as for the indicators today, from the US we get the second estimate of Q1 GDP, and expectations are for the economic growth to be revised up from the first estimate. Although this will still point to a considerable slowdown, following a growth rate of 1.4% quarter-on-quarter in Q4, an upward revision is likely to calm some of the concerns regarding how the economy performed in the midst of the global financial turmoil that marked the quarter. An upward revision in Q1 combined with a continued improvement in Q2 data could raise the likelihood for a near-term rate hike even further, and thereby support USD ahead of Fed Chair Yellen's speech today. The second estimate of the core PCE deflator for Q1, the Fed's favored inflation measure, is also due out, and is expected to confirm the preliminary figure. Elsewhere, the leaders of the G7 nations will conclude their two-day summit in Japan. Yesterday, they reaffirmed their commitment not to devalue currencies competitively, but also warned against wild exchange rate moves, something that leaves the door open for Japan to intervene in the FX market if moves are judged to be disorderly. Besides Fed Chair Yellen and any potential remarks by the G7 leaders, we have no other speakers scheduled for Friday. For more information, including technical analysis, please read the full comment on ironfx.com or download our app and get all the information you need to trade delivered directly to you. Also, follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Sakis Paraskevov, Senior Fundamental Analyst at IronFX, wishing you solid trading.